All right, so the question is, when is Fed Governor Lisa Cook going to get the boot? Joining us now to talk about that and a couple other things, David Malpass, former president of the World Bank Group. Brian Brenberg, of course, co-host of the Big Money Show from 12 to 2 p.m. Eastern, right here on Fabulous Fox Business. Brian, just start with you on Lisa Cook. She needs to be, mortgage fraud is the allegation. Actually,
Right.
there are two, we found out. There are two mortgage frauds, separate, Michigan and Atlanta. But they're allegations, I get that. Why wouldn't the Fed suspend her and investigate?
Well, that would seem to be the right thing, and especially in this case because her job is interest rates. I mean, she's on the Fed board, and she is choosing to do something on her mortgage application, say she has two primary residences. Well, I'm not a logician, but I think you can only have one primary residence. And the reason you do it is because you want a better interest rate, right? So if America's got to pay the interest rates that the Fed is setting, then I think a Fed governor ought to pay the interest rates that she's supposed to pay on one primary residence, but not two of them. There's a tax thing here probably too, and I don't even know what that is, but in a lot of states, you can homestead a primary residence. So it's tax, it's mortgage. To me, for somebody in her position who's appointed till 2038, by the way, you got to have some accountability there.
It's a binary. It's not hard. Is this your primary residence? Primary
means one. You don't get two or four, you get one.
All right. David Malpass, if you want to talk about that, go ahead. But you've got some suggestions for the Fed at Jackson Hole, right? Growth doesn't cause inflation. And I want to ask you this. In your op-ed piece, we have a tear sheet up. The Federal Reserve doesn't have to be an enemy of growth. Okay. You talk about forward-looking market-based data, which I love. Forward-looking market. Give me a for instance. Give us a for instance, a little quick Malpass education.
Hi, Larry, and happy birthday. I know you don't want accolades, but I have to say thank you. You brought me to Wall Street. You've been a champion of growth. You changed economics. You've been huge. Happy birthday.
Thank you.
Here's an example. In the 2000s, the Fed was setting interest rates based on backward-looking inflation data. It showed that at that time, inflation was low, and they weren't raising rates, so it contributed to the bubble. This is happening over and over again. I write about it often in the journal that the Fed's models are wrong. So where we have them right now, they're not looking at the housing, what's going on in the housing data. They have the interest rates high. It becomes self-fulfilling because it pushes down the growth and the prices on housing. So they'll be behind the curve. One final point. If they had the rates lower, let's say 50 basis points lower, how would the world look at the U.S.? They would love it, and the capital would flow in.
But David,
so the dollar wouldn't weaken. We'd have the Trump dollar.
All right. Give me, just quickly, give me a for instance. What market-based indicators would you suggest they look at?
You can look at commodity prices, but also look at them as you change the interest rates. So that if you lower the interest rates, you're going to get more production of energy and prices will fall, and you'd be able to follow that. It's a virtuous circle, and you could get substantial interest rate cuts that would strengthen the dollar. Economics has this wrong. They think that if you lower rates, somehow people aren't going to want your currency. It's the opposite. They want you more when you have interest rates at a reasonable level and you create growth.
Well, yeah, you have higher capital returns. People will invest where the money gets the most yield. Why not? Treasury market is loaded with market-based indicators. You've got all these tips, break-evens and so forth. You could just look at there's 2 years, 5 years, 10 years, 30 years. I never hear the Fed talk about that.
Well, it's because it's their competition. I mean, if you got market-based indicators, right? If you're market-based indicators, you don't need a Fed to sit there and try to divine monetary policy. And it also gets rid of all the business of the other stuff the Fed's tried to do, right? All the DEI, all the climate, all the systemic stuff the Fed's been in for so long. The market doesn't do any of that on interest rates. And that, I think, is what we need, Larry. We got to get away from an institution that has lost its focus and, as a result, has gotten us into this mess where rates are too high.
Right. All these consumer price index based. They're called TIPS, okay?
Yeah.
Treasury inflation protected bonds. They're all slightly above 2%. 2 years, 5 years, 10. They're all basically above the Fed's target. That's why their rate is too high. You just, and I agree with Dave Malpass. You could look at commodity prices. Okay, I got another one for you.
Okay.
How about a rescission? Right now, okay, a pocket rescission, 45 days before the end of the fiscal year, legislation passed 4 or 5 decades ago permits a pocket rescission. The administration can cut spending, and unless Congress comes back and stops it, game, set, and match, over. A pocket rescission. OMB Director Russell Vogt is talking about that. No, we got about 150, 175 billion of DOGE, waste, fraud, and abuse spending cuts. I'm game.
Well, I'm a huge fan, and I like your interpretation of why you can do it. Now, the Government Accountability Office would say that's the wrong interpretation, but I say fight it out. I mean, let's find out what the pocket rescission is really about. I didn't love that we only got $9 billion in the last one that we passed through Congress.
I'm waiting.
It's too small. So I say go for this and have the fight. And by the way, Republicans win this fight either way, because some would say, well, if you let the president claim a pocket rescission, just remember the Democrats could use it too. And I'm thinking, well, wouldn't that be great?
Yeah.
Wouldn't it be great if Democrats cut spending too? But I think this is a fight worth having. And I think the president's got some prerogative here. And I think you've got precedent, too. I mean, you go back to Ford, Carter, you've got some precedent for this. So why not put it out there and let's find out what we can do?
Dave Malpass, you wrap it for us. You're an old budget guy up on the Hill. What's wrong with a pocket rescission? Let's knock another $100 billion off of the deficit by cutting unnecessary spending. Go ahead. You get the last word. 20 seconds. Go.
It'd be huge. We'd get lower interest rates, which is important, but we would also please the public. Public has to know that this is good for them because the government is crowding out them, their jobs, their small businesses. So if you had a rescission process, you would benefit everyone. That has to be communicated clearly.
I love this. Get them going. Let's get it. 45 days. The clock is ticking right now. This week, they could put it out there. David Malpass and Brian Brenberg. Yes, sir.